I'm going to be showing you a EUR-USD 60-second option that I placed on Monday, June 11th, 2012 at around 3:21 a.m. in the morning Eastern Standard Time. It was a small investment, $24, as I'm going with my money management practice right now because markets are in flux. They're moving up and down. So rather than taking too much of a risk, I've sort of limited my risk to the lowest available amount on 24 option, which is $24. And that's what I'm going to be using for now until I feel more confident in the markets. But it's been working out well for me. So as you can see here, it was a put option, $24, resulting in a payout of $40.80. Very nice win, as you can see over here, considering it was a 60-second option. And I'm going to go into the chart work of why it worked. So as you can see over here, the market in general, according to this 50 EMA, and just as you can see, just looking at it, you can see the market is slanting downwards. So, and if you saw Rich's video on Monday, depending on when you watch this, he explained also that the EUR-USD has been headed up on Sunday afternoon from 5 till about 10, 11 o'clock-ish, Eastern Standard Time. It was heading up, but then what happened was it started going down, and it's been experiencing that downward momentum ever since. Now, there have been areas of consolidation. I mean, this is one of those areas that happened where the price was sort of ranging between these areas. And as you can see, I drew these lines to help me make decisions on where I was going to place my put and call options. But eventually, somebody's got to win. And what I mean by win is either the bears or the bulls, buyers or sellers, somebody is going to push the price in an eventual direction. And as you can see here, based on what was happening with the EMAs, based on the higher time frames, based on the trend in general, it was going to go down. So I was waiting and watching for a put option that I could place that would break through this area of support that was over here. And the way I saw it was right over here with this doji. This doji was a pretty good identifier that it wasn't going to hold. It was going to try its best to try and come back up, but it just wasn't going to succeed. And as you can see over here, the next one was red, and the next one after that was red. So the stochastic and the RSI failed to show what was going to happen, obviously because it wasn't in the correct market conditions for it. So it's very important, I guess, the lesson for me, and if you want to share in this too, is that know when to use your tools and know when they apply. So, for example, the stochastic here is just showing red, 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 but it doesn't show that it's been a huge, significant downturn comparatively to the rest of the time on the chart as displayed right now. So, while over here it showed the clear, oh, this is going into an oversold condition, it's going to head back up, overbought. But this one over here, technically, it should be showing that it'd be going even further down, but because the way the stochastic works, it just shows that it's just sort of bottoming out over here. So you got to be careful with that. And the same thing with the RSI too. It's just sort of lagging over here. And I think that's just a reminder, like all indicators in general are lagging. So they only work on the price that's happened. So they can't predict price movement. You can just use them as probability, as a form of prediction. I don't want to use the word prediction because it's not true, because it just shows you what's happened in the past and gives you an indication of what might happen in the future, and then you can make the strategic decisions based on that information. So don't put 100% of your faith in indicators, is what I'm saying. Otherwise, enjoy getting burnt. It's as simple as that. And trust me, I say that politely because I've been burnt by trusting too many indicators or just having what some people call analysis paralysis, which is where you have so much stuff on your charts that you just can't understand what's going on. So that's pretty much it from my end. If you haven't got a 24 option account, you can click the link in the description and you can go to 24 option and fund an account, and then head to the live chat and ask for a demo account to give you a reasonable demo account size, about $500, which you can use to start practicing your strategies and training. And it's a great way to start working on your confidence, just boosting up to a level that you feel that you're ready to start trading live, and then eventually you can go to your live account without having drained or wasted any money in quote-unquote tuition money and learning the markets. Be sure to share, comment, like, and subscribe this channel and the Happy Forexes channel. Happy Forex's channel is a great resource of a daily trade, and you just get a solid source of information, and it's taken at usually during the open of the London session. Sorry, not London, the New York session. And it's just a solid resource, and I found I've learned so much from that channel, so I highly recommend it to you too. That's pretty much it for me. I will see you tomorrow.